Welcome back to Wealth Mavericks, the podcast where we help doctors unlock the secrets to building generational wealth. And on today's episode, we're continuing our conversation about the importance of having a plan. When you start earning a high income, how are you going to avoid the mistakes that so often people make when it comes to wasting their hard-earned money, and just the importance of knowing what are your goals, what are your values, and when you're putting that plan in place, what is important to know?
It's not, the proof isn't, oh, because my CPA said so. Because by the way, it's your tax return, not your CPA's. They sign as a filer, but you're saying what they did is honest and true, and you're under perjury of that information being accurate and correct, not the CPA.
Determine that amount ahead of time. And like you say, leave yourself some room, have some fun. But if you don't plan for what to do with the rest on top of that, and then you get to the end and you're like, wow, I did not save enough, and now I have to keep working. You're hurting your future self so much by ignoring it and not having that plan.
You know, it's interesting that we're this is kind of a continuation of our last episode. And in the beginning of the last episode, you were talking about, certain personal events that occurred, and you saw that happen, and all of a sudden it was like, oh my goodness, I own this, or I owe this, or good problems to have. Was one of the comments. And you hear this all the time is, oh, you're making more money and you have a tax problem. Well, that's a good problem to have. Problems are problems. Good or bad, they're still problems. Just because you do put a descriptive and an adjective or verb or whatever it is in front of it, I'm not an English major.
I am.
Then what is that word?
An adjective.
Adjective, thank you. An adjective in front of the action. Problem is an action?
Or a noun.
Noun, okay. Yeah, you can name the problem, right? Capital P.
Sure.
It doesn't matter. It's still a problem. It's like lipstick on a pig. Pig's a pig, right? So, and the reason why I bring this up is that, oh, yes, I want good problems. They're better than bad problems. But you have to still have a plan to address problems. That's what they are. They are a problem. There's an issue. And the issue is because of lack of planning. And so the planning for it, and usually most people, we talk about planning from a perspective of goals, right? What do you want to achieve? So there's some people who we talked about last episode that you love to travel. And then there's some people who love those nice fast cars or those sexy looking cars. And then there's some people who want to quote unquote retire earlier. They just want to stop doing what they're doing in either a time frame or at a certain age. Right. And you start seeing this in some professions, especially with physicians and burnout and the truncating of time of earning years, where they gave up a decade of their life for education. Now they're practicing medicine. They're making a decent amount of money, and they're like, oh man, I'm making enough money to where I want to stop this as soon as I can. Right. So you're truncating your earning years, but now you need to save up enough to allow your lifestyle to continue beyond those years and then some, right? And you've stopped working. Now, also the other thing is that you stopped your tax benefits. So every dollar that you use is a taxable dollar unless you plan for non-taxable dollars, right? So whatever your goal is, you still need to understand how to get there. And so there's decisions that you need to make today, just simple things like, what kind of business entity should you start? Why? What's the outcome? How do you manage that business entity? Meaning from a bookkeeping perspective and not commingling personal and business. How do you take income from it? So like S corporations, one of the things we hear a lot of time is, people worried, well, if I save money on taxes, am I going to get audited? Depends on how you're saving money on taxes, because there's a lot of physicians we've worked with that, they've been with their CPA 10, 15, 20 years. I had one guy actually in Corpus Christi. He was not a physician. He was a finance guy, and he had two separate companies, and he was generating close to 600,000 in profit of each of those. But his total W-2 income was 30 grand.
Oh, wow.
That's an audit in the making. Now the CPA did that to lower his Social Security tax, to lower his payroll tax, to lower these things. But this is tripping over hundreds to pick up a dollar. That's what that's doing, because now when you have a low reasonable compensation, well, what's reasonable compensation? That's the IRS's way of defining what you would pay somebody else to do your job.
Okay.
Or your tasks in your job. So as a CEO, we wear multiple hats. As a business owner, as in your position as one of our coaches, you wear multiple hats. So you have different tasks and different hats that you wear. Each of those you can hire somebody else at an hourly rate to do those tasks. That's what reasonable means. It's different in California than it is in Kansas City, Kansas. Right. And so the IRS uses vague terms like reasonable, you may, generally, because they're opening up the opportunity for us as business owners to define what we are going to do.
Okay.
Then if we're not doing the right thing, it keeps that terminology vague to where they can come and say, time out, you're not doing the right thing. So having it vague and not having a box and rigidity actually allows it to be a better partnership with the IRS. So reasonable compensation is very important, especially when you're talking about an S corporation. Okay. An S corporation is a type of business entity. A lot of doctors are an S corp. If they have multiple partners in a practice, they may be a partnership, which is different. But let's talk about S corp. S corp specifically says you need to pay yourself a reasonable compensation, meaning a W-2 salary, because you are an employee and an owner. So how do you dictate what that is? We've seen a lot of CPAs that say, oh yeah, well, rule of thumb, check the weather. Where's the wind blowing? We're going to do 68,000. But you can't go to court. Think about this. Whenever you see TV shows where they go to court, right? There always has to be evidence of what you're talking about. There has to be truth or evidence to support your truth, your version of the truth, right? You can't just be, well, you got an honest face, I'm going to believe you. There is no judge that's going to do that. You have to have proof. So you need to have proof of why 68,000. It's not, the proof isn't, oh, because my CPA said so. Because by the way, it's your tax return, not your CPA's. They sign as a filer, but you're saying what they did is honest and true, and you're under perjury of that information being accurate and correct, not the CPA. Their job is to make sure what you're doing in your business is appropriate as a tax partner of the IRS, that they can file a tax return and sign it. It's your job to say, I am in agreement and I support this information. And if it's not, who gets attacked? You do. You get audited, not the CPA. You do.
Yeah. So your CPA has a process to determine reasonable comp.
Should. Most don't. And because most don't, is why we do, right? In our process, when people go through our discovery and they decide to become a member, then once they become a member, we start going through these other more significant detailed things like understanding your budget, what's your lifestyle spending. Again, don't care what you spend your money on. It's your money. You've earned it. You've worked hard for it. You deserve it. But we'll tell you the consequences, good and bad, of what you're doing. You can decide on what you want to do. If you're okay with, taking an extra 10 grand a month out of as income for just playing around and paying the tax man 35% on that, that's fine. You're allowed to do that. But if you're not, or you don't like that, you don't want to pay the tax man, well, wouldn't you want your professionals to tell you what those consequences could be? So then we have an actual reasonable compensation formulation that we take all of our people through, so we can justify what that reasonable comp is. Okay. So why is this so important? Because that compensation, that report says, based on your answers, what your minimum salary justifiably with proof and evidence can be. Maybe it is 68,000. I will tell you, it's never a round number. A round number in the W-2 is the first indication that the IRS will look at and go, yeah, they guessed.
Yeah. That's good to know.
Flip a coin, guess, because most of the time we're compensated based on an hourly. Even if we get a salary, it's broken down in an hourly. And when you get paid on a regular basis, it comes out to an odd number.
Yeah.
because of how you get paid
Mm-hmm.
and taxes that get pulled out and all that fun stuff. So it says 68. So that's important. And I just want to make sure that this is important, because a lot of CPAs will lower reasonable compensation to save money on payroll taxes, social security tax. What social program is underfunded every political season? Social security. If you've got the money to pay into it, pay into it.
Mm.
Who cares? Why risk you being audited
Yeah.
when paying penalties and interest on something that you don't have proof over, when it really you should be doing? Because when you retire, guess what you're going to be filing for? Social security benefits.
Seriously. Yeah.
Right? So
Yeah.
now everyone says, well, it may not be around. Really? I mean, if Social Security is not around, then we're all probably speaking a different language. Right? I mean, think
Yeah.
about it. It is a program that socially affects every single taxpayer citizen of our country.
Mm-hmm.
And it's just going to go away? No. We will continue to fund it one way or another, right?
Yeah.
So I think we just need to be real and not allow that chicken little threats. Now, if it does go away, great. You still have justifiable evidence that you did what you needed to do based on documentation. That's all we're saying, is that let's not make plans on of what people say may or may not happen. That's all clickbait. And I'm guilty of that as well. I have my own opinions.
Yeah.
But opinions are not part of your plan. It needs to be based on fact. It needs to be based on a process of why you're doing what you're doing. And one of the keys I would always encourage you to do is, whoever you're working with, even if you're doing everything on your own, think about, if I had to stand in front of a judge in a courtroom, can I prove the decisions I've made?
Mm-hmm.
And if it's like, then you need to have a real good story of explaining why you did what you did. Justification. Doesn't mean they'll agree to it, but you have to have a justification of the thought process of why you did this. Because it may actually be reasonable for you. Maybe not the next guy or gal, but it could be for you. Right? But that's what I want you to do. Think of that. Every decision you make, think about, if I had to stand in front of a judge and prove what I just did, can I? Because that's going to happen 7-8 years from now. Do you remember what happened 7-8 years ago? I barely remember last year.
I barely remember yesterday. Yeah.
Exactly. What I had for lunch or breakfast, I don't know. So
that's good.
Yeah.
So go through a process, make sure you know what your reasonable compensation is that you should be taking. If you don't know this, get some help with it.
Yeah.
So we could leave it at that and just have it be, this is our topic today, reasonable comp. Or we could keep going with what are some other, that's one part of the plan. And every part of the plan you put in place is more peace that you have, when you go to sleep at night.
Yeah.
So there's plenty more, right?
Yeah. Well, and I say let's keep talking about a couple more things. I mean, I don't like the word budget. I think it's an F word, not the bad word, but failure. Because I mean, when you think about it, when people put a budget together, and also people don't want to be told what they can't spend. Right. Which is why we don't do that. We build out a cash flow map. We map out your cash flows, your fixed expenses, your variable expenses, and then we throw a little bit extra in there for a rainy day. Right. Or rainy days, or, New York, Northeast winters, whatever you want to call it. You got to have a little something else in there, but flexible enough not to where it's very rigid or stringent. Right. But what we also do is we include the aspect of inflation. We also include the tax rate you're at. Right. So, I spend $3,000 a month on my mortgage. No, you don't. Because you have to take $4,500 of income, pass it through the tax man, Social Security, Medicare, unemployment, whatever else, to go into your checking account. And then you write your check to the mortgage company for $3,000. Right? So it's $4,500. That's the budget. Right? We need to be accurate with our stuff. Right? So that's a fixed expense. Well, what about food? What about gas? right? Well, gas, I do that through my practice. Great. Food, you don't. Okay. So let's look at food. What's that cost? Inflation with food? It's crazy. We need to look more at inflation than we do need, but also we have sales tax a lot of times on things we purchase. There's some food items we don't have sales tax, and there's some food items we do. Right now, I'm not getting down to the pennies and cents. I'm not saying that. What I'm saying is that just having a idea that when we talk to people, they usually go, oh, about 12 grand. Okay, great. What makes up that 12? Oh, I don't know. I think that's just what I remember. Well, you should know that. And the reason being is that in the planning process, your lifestyle expenses, think about it, your lifestyle expenses are the reason why you're doctoring, or you're running a business, or you're generating revenues to pay for that lifestyle. You're not doctoring and then making up a lifestyle from that, which is actually what some people do, right? Is, oh, I'm going to make 800,000. I'm going to create a lifestyle of 800,000.
Yeah.
That's not sustainable. It really isn't. So, and that's why people have financial difficulty. That's why previously you said there's a lot of 70-year-old doctors working paycheck to paycheck, as because of that planning. So let's allow you to have, and then whatever's left over in your that you don't need, discretionary income is what the average advisor will talk about. Society says discretionary, meaning that you can do whatever the hell you want with it. Well, that usually means you can spend it wherever you want. No, let's plan for it. If we can do it through the business, then it could be a tax benefit. And you can grow your wealth from a tax efficient perspective. That's why the wealthy are getting wealthier, because they understand that tax code. So you can kind of see the different segments, right? In one area, yeah, that sounds okay. But then you add a second area, you're like, oh, okay, that makes a little more sense. You add a third area, you're like, oh, and then it leads to 4, 5, 6, 7. And then you have that peace of mind of, I got this machine. I got my plan. My wealth building machine it's moving. And those dollars now are working harder for you than you are for it.
That's good.
And that's the key. That's really the key.
So know that amount, determine that amount ahead of time. And like you say, leave yourself some room, like have some fun. But if you don't plan for what to do with the rest on top of that, it's just going to float away. Like, oh, and then we'll ask you a month later, like, well, where did that extra 15 grand go? I don't really know, know? And then you get to the end and you're like, wow, I did not save enough. And now I have to keep working. So you're hurting your future self so much by ignoring it and not having that plan.
Yeah. And we're here just to kind of give general, right? There's obviously more steps. There's more things involved with it and all that kind of stuff, at least from our perspective and how we work with our members. But, just from a high level, sharing a little bit more than what some people may or may not even know about. And, I think that's the whole point of YouTube and podcasts. Give content to help people understand the knowledge. So you had made a comment, knowledge is power. But the reality is you can have all the knowledge in the world, but if you're not doing anything with it, you have zero power. You're powerless, right? So you have to take that knowledge that you earn or learn and actually put it to work. Do it. We're human beings. And so when you learn something, you got to being, you got to put that into action, make it work for you. And then you'll see the results of it. Just because you make a decision today doesn't mean the next 30 years have to be based on that decision. Right. Yeah. You being a doctor, you kind of make that decision, right? It's an educational commitment. That is probably a lifetime commitment, but everything else in your life isn't, right? It's spending money wise, right? There are things like spouses and that kind of stuff, but spending wise. So if you make a decision, oh, we need 15K a month. And you go 6-9 months and you review it and you're like, oh, actually we didn't need 15. We only need 11. Great. Just keep doing 15 for another, 6 months, see what it looks like and look at your tax bill. Wait till you file your taxes, see what your tax bill looks like, and then make a change in a decision, right? Lower it from that perspective. Or, oh, kids are going to be going to school soon. So there's be private school. So right now it's 11, but next year it's probably going to be 13. Yeah. Right. There's life events pop up and we need to make decisions based on it. We just can't allow those things to occur. And then we react like a rubber ball in a room. right? Can't be just bouncing around everywhere. There has to be a good plan, process, flexible, but a plan and a process.
That's good. I like to equate a lot of things in business to fitness, and because there's just so many parallels all the time. And when you say like, yeah, knowledge is power, but not if you don't put it into place. Like we all know what we need to do to be healthy, but how many people just aren't doing it because it's hard and it takes discipline, and this takes discipline too, but of course it's worth it. So that's what we want to leave people with. I think we can continue in future episodes talking about more of the mindset part of it, because again, if you're just grinding it out with fitness or with saving money or with your business, like you're white knuckling it will only take you so far. But when you work on what's behind the ears and why you're doing what you're doing, there's so much more peace with that too.
Absolutely.
So we'll explore that. Thank you for joining us for this episode, and we look forward to talking to you again.